Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with our weekly stock market analysis for the first week of February. January is done. So let's take a look at our monthly numbers as we walk into the first active trading week of February. As you can see, overall, all of our major indices were down month over month, leading the way with the Russell down 3.72%, and coming in right behind that is the Nasdaq, and then just 1% below is the S&P 500. All of the yearly gains were wiped out roughly over a 2-day period, primarily driven by negative news coming out of China as associated with the coronavirus, as well as some negative news coming in from Facebook, very positive earnings report. However, the market felt it was not good enough, quote unquote. So we saw some pretty good selling off toward the latter part of last week, as well as gold coming in as a location for a safe haven temporarily. Saw a pretty nice gain over the month, up 3.8%. So we can see there is some tendency to believe that the market has reached its peak and we're looking to roll over. And we'll dig into that as we look at our monthly update. But just want to kind of give you a broad overview that the ranges have begun to extend just that much greater over this month as the market continues to look and do some price discovery to identify if there's opportunity to continue to push upward, or is there an opportunity to search below and fill some of the gaps that we've seen specifically in the S&P. Now, at the same time, we still are seeing very, very strong support for the NASDAQ tech-related stocks as we saw some very strong earnings over this last week from Amazon and Microsoft. So there is some opportunity for us to identify an area of support and continue to push upward in a longer term trend. So we'll take a look at that as we jump right in to our overall update, and we'll look at the SPY and we'll go forward with our normal monthly view as we walk in, and we'll look for some opportunities to highlight a few areas that we want to call your attention to, and specifically this longer term trend line that goes back all the way toward the middle of the summer of this year was just recently broken, and we did close just inside of it with a bearish monthly candle. So as we walk into February month, the longer term institutions will look at this as a bearish signal. However, we don't feel that this will continue to come to fruition, at least in the short run. Now, if it does, we do want to look at a potential movement deck down within the range and either hit this first trend line or the second one, a higher probability hitting the second one, which comes in roughly about $300 mark, which also coincides with our value area high on the monthly chart, roughly about $350. So this could be a potential support if we do continue to move in a downward fashion. However, we don't necessarily want to make a bearish call at this moment, given the overall broader strength and pretty solid information coming out of our earnings reports, especially on the tech-heavy NASDAQ, but the tech sector does weight heavily in the overall broader S&P. At the same time, do want to kind of call your attention to this level here. We do have a high volume node, so there is some activity coming in roughly about the $323 amount as a potential opportunity for some additional engagement. Now, as we move on to our normal weekly chart, you can see that we did breach beneath our 9-week moving average, and there is still a pretty good distance down to the 20. So if we do continue to showcase some bearish sentiment, the next logical location would be coming in roughly about that $314, $315 level as potential support. Now, as you can see, a little bit more detail on this longer term trend line that we've seen over the last several months or so. We have very visually breached it, but there are some additional opportunities for us to take a look at continued support if we do move back inside of range. However, again, on the weekly chart, it does showcase, two very strong back-to-back bearish candles over the last 2 weeks, primarily driven by coronavirus type news. So there is an opportunity for us to potentially reverse back upward in an opportunity for our short squeeze as the bulls look to step in as news coming out of China begins to somewhat stabilize. But at the same time, we don't want to come in with too heavy a hypothesis in one direction. Obviously, that can cause a lot of concerns and potential some losses as well. So we want to watch on the first few days of this upcoming week to take a look at, is there an opportunity for us to showcase a little bit of knowledge and let the market kind of unfold. Now, we don't typically zoom in onto the daily, but we do want to kind of call your attention to a potential support level as the S&P touched almost to the tick to our 50-period moving average, which is this teal colored line here. And this is an opportunity for us to potentially see if bulls will step in. In the previous slide, we showcased a high volume node of transactions that potentially could be a lot of buys on a very strong day of volume. So we'll watch to see if this continues to look for reversal and target back upward to that $330 level, or is next week going to be potentially just a trading range week. Now, our hypothesis is we're still very much bullish in our longer term trends that we see both on the monthly, the weekly, and even to some degree on the daily, as we were not able to close beneath our 50-period moving average. So we'll take a look at the NASDAQ to see if that holds true in a continuation. So we did close off of our open from the month of January. However, we did still close with a bullish candle on our monthly, which does showcase that the bulls are still in control. However, losing somewhat control as we look at kind of a bottoming tail hammer from a chart pattern perspective. And we are still very much higher than majority of our moving averages. And we've seen some very solid, consistent results in our latest earnings reports. Now, as we walk in to the first week of February, we do have another bellwether, Alphabet or Google parent company, reporting after the bell on Monday, which could again give us some type of catalyst, albeit upward or downward. But so we want to continue to watch that. Now, if we step into our weekly, you again can see that there are some signs of potential weakness coming off of the last couple of weeks, but we still are very much ahead of our 9-period moving average and even very strongly ahead of our 20-period average. So as these averages begin to change their slope and direction, we will continue to look at if there is an opportunity for the bears to step in. So over the last week or so, we've seen the bears really getting some type of traction. However, is it going to be enough for them to see that sustaining, given how far we have come, especially on the NASDAQ, roughly 16 weeks of very strong bullish action? It is natural for us to look for a potential pullback and look for a rebuy to continuation up to new all-time highs. So we'll take a look at that. And as we did on the S&P, we'll just take a look at the daily, and we'll zoom in just a little bit here. So we have our 9-period moving average, which is the lighter green line here at the top, and we did close just beneath our 20. So that could be a signal for us, but we don't necessarily believe that we will see some bearish continuation going into next week. Hopefully things will have been able to stabilize going into the front side of the week from a coronavirus perspective. So as we'll move on, we'll take a look at the IWM, and we'll jump back out to the monthly as well. As we can see, the IWM did have a bearish month as well, with the largest on a percentage decrease of just short of 3.75% on the downward side, with a pretty large range coming in a little bit greater than 10.5 points month over month. So we did see a little bit of what we call a look above and fail from a value perspective here. So this could be indication that the Russell is beginning to roll over after a number, 4 months of very, very strong bullish and 2 months of a breakout. So this could be an opportunity for us to see a little bit of a pullback on the Russell. However, we don't want to fully go bearish very similarly, as given all of the downward pressure, we did see the Russell close in exactly on this longer term trend line that we see here, coming in at roughly about 160.50, and a look below and fail there. So we do anticipate potentially some type of trading range that will be coming in on over the next month or so from a Russell perspective, as inventory kind of comes back into balance, and we do see additional information coming out of China, as well as other both U.S. domestic policy type information. So as we zoom in on our normal weekly chart, you can see exactly, we did see it close beneath our 20, but still above value, and still as an opportunity for us to potentially look at this longer term support line as a potential reversal right back up into range. Now, again, as we stated both on the S&P and on the NASDAQ, we do want to allow the market to unfold and not come in with too much of a very directional hypothesis, given so much news and so much fear that's in the market, where we don't necessarily have predictable type patterns. But if you are a bear, you have seen some very, very significant returns over the last month and week. So they will be looking for some type of continuation on. And if we zoom in on the daily, we can see even clearer exactly where we have seen some type of reversal, again, with our what we call a look below and fail here. So there is an opportunity for us to kind of come back into range, or more specifically, looking to kind of go sideways over the next few days, few weeks, as things look to kind of stabilize. Now, at the same time, we don't necessarily take a look at the Dow, but we do want to kind of zoom in just a little bit to showcase that we have seen some pretty significant reductions in the Dow. I think Friday, the Dow was down over 600 points at one point. So there are some very strong fear mechanisms that are kicking in. And if we zoom back just a little bit on the weekly, you can kind of see there is an opportunity, again, as price kind of stays above its 20-week moving average, but falling right into this larger consolidation period here, going back into November and late October. So as we watch and look ahead for the upcoming week, we do want to have some type of balanced type viewpoint in regards to direction. There is probably an equal probability of going upward or downward, with some slight skew toward the downside as additional information comes out, as well as additional information comes out on the U.S. presidential impeachment verdict coming out, I believe, on Wednesday. So with that, we'll kind of hold ourselves dry, and we'll take a look at a few of our safety mechanisms, specifically gold, to see how those have held up over this past month as well. Now, as we switch over to gold, you can see very bullish over this past month, coming in at 3.8% upward, with a pretty significant range of just short of 6 1/3 points upward, and it came right into our overall forecasted target from this longer term consolidation range going back into September. So we did see a nice breakout, as well as it just mapped right into that anticipated trend line that we had identified. So gold is typically a safety mechanism if our broader markets are seeing some type of bearish activity. We will shift into safety. Now, we do continue to maintain our bullish stance on gold as overall fears continue to plague the market, and we can kind of see a little bit of a rounded bottom here, a nice small pullback, and then a bullish breakout. Now, we did map right into this trend line, as we just denoted, and it is coming into our value area high on a weekly perspective over the last year. So we do anticipate a little bit of pullback again for gold. Now, that could be some type of anticipation of the broader S&P and NASDAQ and Russell continue to look potentially for a bullish perspective. But this does aligned right into our overall analysis and prediction that we did map right into our target. So we did scale back at least a small portion to lock in profits here on gold, but we still have a longer term bullish stance on it. And we do anticipate, as things kind of continue to stabilize, there is an opportunity for us to kind of go sideways again over the next few days as things continue to stabilize out. So as with that, we'll kind of keep it short. And happy Sunday and happy Super Bowl. Hopefully your team has won. And as with always, it's your money and it should be under your control. Take care.